Welcome back. I'm Pratap here. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. Here you have YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we will be getting into the playlist supply demand zone price action course. So I'm sorry, actually today my broadband connection is down. At present I am accessing using the mobile network and it is very slow and taking a longer time for loading the pages. So kindly be patient. Okay, now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please find the Telegram channel link and join at our Telegram channel. It will be useful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. So I request all of you join at our Telegram channel. Okay. Please make use of this opportunity for all the new members. And now let's evaluate the performance of the high liquidity zones. So as I told you, please be patient when I'm loading these charts, because at present I'm accessing from the mobile network. So it's taking a lot of time to load the charts. Okay, the first one is Tata Chemicals. This is a 75 minutes high liquidity demand zone. So this is a rally base rally. And this 75 minute zone want to fine tune with 15 minutes time frame. So I'm changing the time frame to 15 minutes. In the 15 minutes, we didn't have a proper structure here. 15 minute structure. This is not a base candle. This is the ERC candle. You have a rally candle. You have another drop candle, ERC candle. So 15 minute structure is not there. There are higher chances of violation of this zone. But if you look into the 5 minutes time frame, there is a lower time frame zone as an horizon to the higher time frame zone. You already learned in lesson 22, lesson 22. You have a rally, base rally. And which is the origin for this entire 75 minutes high liquidity zone. Here you will be finding the real order flow. See here, it picked up the orders and again from this area, it picked up the order and the entire move has started. So this is the area again, once again here prices came just from this 5 minutes horizon again with a gap up prices moved up. So this is the area you should plan your trade. And today at 10:50 candle, prices reached this zone and then reached the target. 15 minutes target. Let me go to the 15 minutes time frame. Okay. So here at the 15 minutes we have a drop base drop, and from this 5 minutes zone as an horizon to this high liquidity zone till the 15 minute zone, we have 1:3 RR is there. But to get a 1:3 RR, you need to adjust your entry point, not exactly here. Because slightly, see, if I earlier when I moved up to this proximal line, I got only 1:2 RR. So slightly I moved adjusted the entry so that I get 1:3 RR. So this is the place we planned the trade. But see, the prices entered into this zone. They entered into this area. Let me go to 5 minutes, you get even better clarity. See, prices entered into this zone. We got our trade in this candle. This is a 1045 candle. Prices went down very close to the distal line. Not exactly a distal, but close to the distal line they moved. And from here again they are started moving up and reached the target. Next time can we plan a trade, you may ask, because prices already reached near to the distal line. They went deep inside, near to the distal line. Next time there are higher chances of zone violation. That is what happened. See, there was some struggle here because there is a very strong order flow is there. And supply is also very strong. There was some struggle, but it was not able to push up to this target zone because already earlier prices moved very deep inside, and now they are violated. But we got a good trade. This is the entry and it reached the target. So Tata Chemicals, how much profit it has given from this 5 minute zone where we fine tuned in such a way, we get 1:3 RR. Let me open the Excel sheet. Tata Chemicals has given 8,360 rupees profit, which is 5.9% ROI as per one future margin cost. This is the 5 minutes demand zone as an horizon to 75 minutes high liquidity demand zone. The lesson you learned in lesson 22. Many times, many trades we have seen these kind of 5 minute zones as an horizon to the high liquidity zones. They gave very good trades previously also. So before zone violation, we got the trade, and after that zone is violated. And the next one is Nestle. Nestle is also a 75 minutes high liquidity zone. This is the supply zone, Nestle high liquidity. See, this drop, base, drop. This drop, base, drop is the high liquidity supply zone. And this 75 minute zone is how we fine tune with 5 minute zone time frame. See here, all these candles are 1, 2, 3, 4, 5, 6. They are not very clear, but if you hide this big candle, you will see the structure somewhat convincing structure. You will see you have 1, 2, 3, 4, 5. Maybe this is a failed ERC as a leg-in, you may consider. If not, this one. But here the prices are in narrow range. That means this entire 15 minutes area, 75 minutes area is also occupied for 15 minutes area. That is, this is the way you can understand. But structure is not very clear. That's why there are many chances such kind of zones will be violated. But anyway, to consider this, I want to see in 5 minutes whether there are any zones. Here you have one drop, base, drop is there. Drop, base, drop. And this zone is already again tested here. It picked up the orders and moved. Next time definitely there are higher chances this zone will be violated. That is what happened today. But here you have a 5 minutes time frame. See here we have a ERC candle, failed ERC candle, looking like a drop candle. Forget about the color of the body. Failed ERC, the body is very small. So this is looking like a drop, and then base and drop. and this is acting as a bull trap. See, today the price is entered into this area. There was some struggle today here because the demand is very strong, but supply in the bull trap consumed all these demands. That is what happened in the traps. Whatever the demand, it keep on consuming. All the order flows it consumes and then pushes the prices down. And finally it reached the 15 minutes target zone. Let me go to the 15 minutes time frame. See, here you have a rally, base rally. After that this zone is violated, but it picked up the orders from this bull trap and finally it reached the target. When it entered into the bull trap at 9:45 candle, but when it reached the target at 13:45. 9:45 and 13:45. Nearly 4 hours time it took to reach the 15 minutes target. It happened because the demand is very strong in this area initially. Once the demand is consumed, and slowly it pushed the prices up to the 15 minutes target zone. And this is the way Nestle has given 4,440 rupees profit, which is 5.5% ROI. You might be wondering why for 4,000 rupees, why we got 5.5% ROI? Because the future margin cost is around 80,000. So that is the reason why you got. If you would have brought 2 futures by investing 1.5 lakh, 1.6 lakhs, you would have got 8,800 rupees profit with the same investment. Generally, you invest for the other futures. With the same amount, you would have got 2 futures today. But anyway, ROI should be 5.5%. This is the 5 minutes bull trap. Above 75 minutes high liquidity supply zone. And the next one is PEL. PEL, you have some issues, especially for the beginners. PEL is purely experienced people's trade, not for the beginners. Why experienced people's trade? I will explain. First, let me show you. Let me explain how we fine-tuned the zone. See, this is a drop ERC candle as a leg-in. You have a base candle, again a drop candle. This is what our software identified, the 75 minutes high liquidity supply zone. And this zone is fine-tuned with 15 minutes time frame. Here you have a drop, 2 base candles, and again a drop candle, follow-through candles. The structure, 15-minute structure is very good. And inside the 15-minute structure, again, we have a 5 minutes order flow, institutional order flows are here. See, here you have a failed ERC candle as a leg-in. This is looking like a rally candle. Prices are moving up. After that, we have 3 base candles and then a drop candle. And follow through candles. And this is the fine-tuned 5-minute zone and a fresh zone. And today prices entered into this zone at afternoon 12:30, and next candle it reached the target. In just 10 minutes, less than 10 minutes, the trade is completed. If you look into 1 minute time frame, you get even better clarity. So you got the trade at 12:34 and reached the target at 12:39. That means in 5 minutes the trade is finished. How sharply it pushed the prices down, this fine-tuned 5-minute zone. But unfortunately, this is not a trade for the beginners. Why? What is the reason? The reason is very simple. The RR. You don't have 1:3 RR. You have only 1:2.6. That means it is a 1:2.5 trade. 1:2.5 RR can be used by experienced people, because they manage, they handle the risk, because they have sufficient experience. Even some of their trades fail, still many times their analysis is perfect. They always get better profits compared to the losses. So that's why they take the trade up to 1:2.5. That is what I explained even earlier also. Even in the risk management sessions also, training sessions, I told you 1:2.5 can be accepted by the experienced people, not beginners. At least beginner, you should have a minimum 1:3 RR. So 1:2.6 is allowed for experienced people. At least those who are trading for the last 1 year and having comfortness in handling demand and supply zones and getting many success compared to the failures, all those members can handle this trade. But not the new people, newly just last 2-3 months you completed the course and now you got confidence, now you are taking trades. Always make sure you should have at least minimum 1:3 RR. But this is the experienced people. See how sharply it worked. They finished. They would have got the profit in 5 minutes. In just 5 minutes they got how much profit? 12,300 rupees profit, which is 5.3% ROI, return on the investment. And its margin cost is around 2,25,000 something is there around that. PEL. But see here how excellently it gave. We got 5.3% ROI in just 5 minutes. 5% revenues you got. If you would have invested the money in a bank, probably the 5% to get that 5% interest, you need to wait more than a year time. But in 5 minutes you got the trade. That is the power of the high liquidity zones. So in the comment section I have written, this is a 1:2.5 RR trade. 1:2 RR means it is an experienced people's trade. That is what the meaning. But here we have 1:2.6 RR. See, at least you should make sure, as a beginner you should make sure 1:2.9 minimum should be there. That is approximately 1:3. But below that, above 1:2.5 and less than 1:3 or 1:2.9 is for experienced people's trades. Okay, we got these 3 successful trades. There is one more trade we didn't accept, that is a Havels. Actually, that is a bear trap trade. That also reached the target, but we didn't accept the trade. So this is the one. This is a 75 minutes high liquidity demand zone, Havels. So this is the rally, 3 base candles and a rally. This is what our software identified as a high liquidity zone. But when it looks into, when you want to fine tune this up to 15 minutes time frame, look into the 15 minutes area. Here we don't have any proper zones. We have a drop candle, we have a rally candle, no base candles. You may ask a question, here we can take, we have failed ERC, 1, 2, 3, 4 base candles rally. But this entire area is already violated. In the recent price action, prices came near to the distal line. See here. And here also we don't have any zone. See, drop candle, rally candle, no base candle in between. So that means there is no 15-minute structure here. The zone will be violated. And moreover, recently the prices came near to the distal line. Earlier also we don't have any 15-minute zone. There are higher chances this zone will be violated. That is what happened. The zone is violated. But below there is a 5 minutes bear trap is there. Now let me go to the 5 minutes time frame. In the 5 minutes time frame, here you have a drop base rally. Again prices came and picked up the orders. This will be acting as a bear trap because it is there just below the high liquidity zone. There are higher chances it may work. This may act as a bear trap. See here prices entered and after that it moved. Did they move up to 15 minutes target zone? Yes, they moved up to 15 minutes target zone. Where is the target zone? We have a drop, base, a drop. See this is the, let me draw a horizontal line. This is the target they already reached. Probably you got a 10:45 candle, you got the entry, and 15 minutes candle, it reached the target. In 45 minutes it reached the target. But why we didn't take the trade? It's very simple. Let me enable this long position. See here, this is what I have drawn, the long position. Up to this blue color line, that is the target. Now let me delete this blue color line. Now you see, the target is up to here, drop, base, drop. This is the target, this is our entry, and this is our stop loss. But what is the RR? You are getting only 1:6.7 RR you are getting. How can you take a trade? But you may ask a question. All of you please observe carefully, especially those who are learning the concepts. Now you can ask a question. Okay, can't we adjust the entry? That means reduce this entry so that we get 1:3 RR. Up to that, can we adjust? Yes, we can do that technique. Previously also we did the same for Tata Chemicals. Tata Chemicals exactly at this proximal line we did not take. We just moved a little bit down until we get 1:3 RR. Can we do? Yes, we can do that. So until 1:3 RR you get, you can reduce. Okay, now you see 1:3 RR we are able to get. Once prices entered in this area, you can take the entry. So here you can take the entry and here you have stop loss. You are able to adjust up to 1:3 RR. But have you got the entry? No. See here, prices entered. They didn't reach up to this, the adjusted 1:3 RR level. And from here they were started moving up. That means we missed the entry. It reached the target, but we missed the entry because until the fine-tuned level. How we fine-tuned? We fine-tuned in such a way it gets 1:3 RR. Here it is not fine-tuning the zone. Here I am fine-tuning the entry. There is a difference between fine-tuning the zone and fine-tuning the entry. I am trying to fine-tune the entry to get the required RR, minimum 1:3 RR. Same thing we did in Tata Chemicals also. Tata Chemical is not the bear trap, but Tata Chemical stock is 5-minute zone as an horizon to the HLQ zone. That trade we took. There also we adjusted that entry. Let me show you Tata Chemicals. See here. Actually, where you need to take your trade here. There, if you want to take an entry, how much RR we are getting at the proximal line? We are getting only 1:9.5 RR. We need at least 1:3 RR should be there. That's why I moved my entry down until I get 1:3 RR. Exactly here I am getting RR. So into that area prices moved, yes. So you got the entry because prices moved into the adjusted level. You got the entry and then after that prices were started moving up. Finally reached the target. A good profit. Got nearly 5.9% ROI we got in this stock. Exactly the same technique if you are applying to Havels. What happened to Havels? Before entering into your fine-tuned entry, prices were started moving up. That's why you missed the trade. Anyway, here also if you want to reject the trade because RR is not there, you would have rejected the trade. There also you would not have taken. Now at least we fine tuned up to 1:3 level. If prices enter into that fine tuned entry level, we get a trade. Otherwise anyway we will be missing the trade. That is what happened. We missed the trade. Sometimes the disadvantage with this fine tuning entries are you will be missing the trade. But on the other side, if you don't fine tune, RR is not there. See, if you don't fine tune, taking entry here, how much RR you got? 1:67.7. It is not even experienced person's trade. See, 1:2.5 is at least experienced person's trade. See, there also it didn't reach. For experienced person's level also it didn't reach. But we are at present learning the concepts. We are in the beginning level. So minimum 1:3 RR is required. So we did not get the trade. 1:3 RR it didn't reach. We missed this trade. But what happened? It reached the trap, bear trap. After that it was started moving and finally reached this 15 minutes target. So this is the reason why how else we didn't take the trade. But why this high liquidity zone is violated? Because there is no order flow. Below institutions kept a nice trap. Bear trap they set. So this is a bear trap trade. But because RR is not there, we didn't take the trade. Or even if you fine tune, the fine tune level, entry level is missed. Prices did not reach. That way how else we missed the trade. Okay, fine. Next, SBI Life zone is violated. We know that the zone will be violated. You already learned the concepts. According to those concepts, this zone is violated. This is a 75 minutes high liquidity demand zone. So here you have a drop base rally. This drop base rally is fine tuned with 15 minutes time frame. In the 15 minutes, we have a fine-tuned zone is available. 15-minute zone is there. See, this is a failed ERC candle as a leg-in, as a drop candle. You have 3 base candles, rally candle. This is the way we have drawn this 15-minute zone. Within this 15 minutes area, look into the 5 minutes time frame. We have multiple 5 minutes base candles are there. That's why we rejected that zone. Because we know the zone will be violated. Now look into that area, fine-tuned 15 minutes area. You have a drop candle, here you have a rally candle, in between 1, 2, 3, 4, 5, 6, 7 base candles are there. That way we can say this zone will be violated. Because order flow is not there, there are higher chances this zone will be violated. That is what happened. The zone is violated. And the next one is Exide Industries. This is also violated. We know the reasons why this zone will be violated. This is also a 75 minutes high liquidity zone. Have a drop candle, base candle, rally candle. Drop base rally. And this is fine tuned with 15 minutes time frame. Look into the 15 minutes area. I consider this as a rally, base, rally. You can also consider drop, 2 base candles and rally. That way also. This is valid either way. So rally, base, rally. And remember this is a failed ERC candle, but it is looking like a rally candle and the entire body is outside the zone and closed outside the zone. All these are all favoring us to consider this is a rally, base, rally. So that way I consider the failed ERC candle as a leg-in. And in the recent price action, see, prices came to the zone, started moving up. So here you have a rally candle, two base candles, and again a rally candle. A new 15-minute zone is created. So we have two 15-minute zones. This is one 15-minute zone, and this is another 15-minute zone. Rally, base, rally. You may ask a question again. Here also there are 15-minute zones. We have leg-in, two base candles, rally, or drop, base, rally. This base is not very clear. This is also looking like a ERC candle. But at least this is the one. All these zones are violated. This is violated. Because prices, next time they reached up to here. Because they reached up to here, the earlier all the zones are violated. That's why this is the most recently active zone, not violated zone. Rally, base, rally. Okay, now both these 15-minute zones should be fine-tuned with 5 minutes time frame. Now let's go to the bottom one. In the bottom one, see here, we have a drop candle, we have a rally candle, in between no base candles. There are higher chances this zone will be violated. This 15-minute zone. Because institutional order flow is not very clear there. That's why that entire 15 minutes area is also invalid. But what about the next 15 minutes area? In this 15 minutes area, you have an excellent drop, two base candles, and a rally candle. But this zone is tested. See here, next time prices entered into this area. And it is a tested zone. And moreover, it is a type 2 proximal entry. Type 2 proximal entry is tested. It is quite dangerous to take another trade here. See, now today it is easily violated. And remaining this area also easily violated. So this is the way Exide Industries, we know that this zone will be violated as Exide Industries, SBI Life, both. And the one is ITC. ITC is a daily high liquidity demand zone. This is a rally, base rally. We have a rally candle. You have 1, 2, 3 base candles and then a rally candle. This is what our software identified as a daily high liquidity zone. But prices today, price did not enter into this zone. In fact, today ITC is bullish. At some point of time, it reached up to here. Even while closing also, it is bullish. Generally, the high liquidity daily zones are many times, they are very powerful. It's not easily let the prices enter inside the zone. Now let's look into the 75 minutes time frame. In the 75 minutes time frame, we have a failed ERC candle as a drop, this is a leg-in candle. We have 3 base candles and a rally candle. So this is the way we have drawn the 75 minute zone. Within this 75 minute zone, identified 2 15 minutes fine-tuned zones inside 75. See here you have a rally candle, failed ERC candle as a rally. You have a base and again a rally candle leg out. Rally, base, rally. This is the 15 minutes fine-tuned zone. And also here also you have a 15-minute zone. You can consider this is the rally candle. This is the drop candle. This is the leg-in. You have 1, 2, 3, 4 base candles and a rally candle. This is another 15-minute zone. And in both these areas, again identified fine-tuned 5-minute zones. we have a rally, base rally. This is the fine-tuned 5-minute zone, a fresh zone. And you have one more drop base rally. This is a tested zone. Multiple times it is a tested. See, prices entered and again started moving up. Again prices entered, once again they are started moving up. Maybe this could be acting as a high liquidity zone. And also rejections, but only thing is, see, prices, second time prices went a little deep inside. But it looks like again drop base rally, LOTL scenario. Generally LOTL scenarios you see from high liquidity zones. It may give some more, it may help, it may give some, maybe some more orders are added, new orders are added into this zone. We may plan our trade next time. Until those high liquidity zones, until it is violated, you can keep on planning the trades. But one day it will be violated, that day your trade will be stopped out. Until then, you will enjoy the success. Success means profits. Okay, today price did not enter into this zone. So these are the high liquidity zones we got in the previous report, and from that we got 3 trades. Hope this information is useful to you. Let's all meet again in our next video. Thank you.